Welcome back to the summit. This is the Institutional Crypto Infrastructure panel. We're lucky to have the CEOs of some of the biggest companies in the space. It's basically the full stack of everything from custody to prime brokerage, spot and futures trading, market making, trade execution, and asset management. And what I thought would be best for our audience who are all trying to figure out how their institutions could get engaged in blockchain, how to have blockchain assets, is to have each of you give a couple of minutes on your institutional offerings and what you're seeing from institutions. Evgeny, why don't you start us off?
Yeah, hi, glad to be here. Wintermute is one of the largest market makers in crypto. We operate across pretty much all the major platforms in CeFi, DeFi, and OTC trading. We transact about $3 billion daily and cover over 100 different crypto assets. Our core business is in algorithmic market making, but we're also very active in a number of adjacent activities, among which is helping individual projects with tailor-made liquidity solutions, enabling new exchanges to scale, and we are generally quite active on the investment side of things as well, having made over 30 investments this year already. For me personally, I have 10 years of experience in traditional finance. I came from one of the largest market-making firms in TradFi called Optiva, which is basically one of the biggest market makers there. And at Optiva, I was building the market maker desk pretty much for most of my time there, growing it from like a trainee desk to one of the largest market makers globally as well in ETFs. In terms of institutional offering, we are talking about institutional. If we are talking about institutional investors like hedge funds, asset managers, and like other types of counterparties, it's primarily on the OTC side of things. We have some of the most competitive prices across most of the tokens that we trade, and we follow the most rigorous compliance and risk management practices in general. In a broader sense of institutional offering, we also work in all kinds of players in the ecosystem, such as lenders, custodians, and of course exchanges.
Thanks, Mike. Why don't you go next?
Thanks, Dan. So my name is Mike Belshi. I'm co-founder, CEO of BitGo. BitGo is a financial services firm, one of the older firms in the space. We've been around since 2013. We're currently a prime broker. We offer a number of services. It starts out at the bottom layer. Actually, we evolved from a technology company, pioneered multi-signature technology. Kind of before that was really the gold standard in security. We've expanded on top of that with a regulatory compliance layer that's a trust company. Started out in South Dakota. We added New York State trusts earlier this year, continuing on that path as well. And then our goal is actually to help build market structure for digital assets, where you see digital assets today trade in siloed environments where an exchange might be both the buyer's broker and the seller's broker and the exchange and the custodian and the clearinghouse kind of all wrapped in one. We're trying to keep storage and safety separate from trading. So we do provide access to the markets, but you do that through us as a counterparty. We can then face multiple exchanges, market makers, et cetera, make sure you get the best prices all the time. Also, then we've got a lending component and more services coming. So that's a little about BitGo.
Tom.
Thanks, Dan. Thanks for having us. I'm Tom Chippis. I'm the CEO of ErisX. ErisX is a US-based spot and commodities exchange for digital assets. We launched in 2019 and operate both the spot market, as I indicated, but we're also operating a CFTC licensed derivatives market and clearinghouse. We've taken a very thoughtful approach to building our platform, not only to perform in the ways that institutions would expect with traditional expectations from what they've experienced in other asset classes, but also having been very thoughtful about the regulatory side of things. Apropos some of the points that Mike just made about the massive vertical integration that you've typically seen in crypto in its early days, we firmly believe that different participants in the marketplace have a different role to play, and their specialization actually is of benefit to those participants. So we are focused on not only building up and operating our exchange and clearinghouse for retail customers who are able to come directly to our market, both for spot as well as derivatives, but also working with institutions and intermediaries. Traditionally, folks have accessed everything from equities to futures via intermediaries because they're trading more than one asset class. And what we have built is a platform of technology, operations, and legal and regulatory capabilities that allow us to deal both with retail as well as institutions, both for spot as well as derivatives. And we firmly believe that that's the trajectory for market development here in the US as we see more and more traditional firms enter the space. My background is a bit more traditional, having been global head of quantitative prime services for Barclays, and also running equities electronic trading for Deutsche Bank here in the Americas, amongst other things in my past. I have a traditional markets background, but always in the new thing, and been very excited to bring my knowledge and skill as well as that of my team to building what we think is the right structure for spot and derivatives and crypto at this point in time, as more and more traditional firms get interested in the asset class.
Thanks, Tom. Michael, do you want to share what you're doing at Amber?
Thank you, Dan. Hi, everyone. This is Michael Wu, founder and CEO of Amber Group. Amber Group is an integrated crypto finance platform. We service our customers from the largest billion-dollar hedge funds, family offices, to global individual customers in all services crypto finance related. We help them from buying and selling cryptocurrencies, exchanging them, earning attractive interest yields on their cryptos and stable coins, doing derivatives, structured products, borrowing, lending, and all things in the crypto finance space. The team now has grown over the past 4 years to about 240 people across 9 global offices. We operate 24/7 with our voice trading desk across 2 continents, and we also have a product suite consist of the Amber app, the Amber Pro, and other services offline. So Amber Group aims to be everyone's gateway to crypto finance. And how do we achieve that? We achieve that by being the one-stop shop that helps everyone from the easiest services such as buying and selling crypto to more customized, complicated structured solutions that's tailored to the institutional needs. I think we are here to service everyone and to bring everyone to the future of crypto finance. A bit of background about myself. Along with my co-founders, we were all back then traders out of Morgan Stanley's trading floor. So we have brought not only the traditional finance experience, but also our own tech and quant expertise into the space. And we've been around for the past 4 years. We're primarily based out of Asia, but our customer base is quite global. And we are here very excited to share with everyone and get to know everyone and service everyone.
Michael, thanks. And it's been an interesting time serving on your board, so thanks very much for joining us here. One of the big things I want to delve into with the panel is just how far have we come on institutional product offerings and what's going to happen over the next few years. And Mike, I'll start with you. You know, we met in 2013. Things were very, very primitive. Could you give us a sense of, you know, what institutions are doing in this space, what BitGo's roadmap is, and the big one is what's still missing? You know, what are people waiting for? What products need to come to the market?
Sure. Well, yeah, Dan, you've been through this all, right? And I think all of us expected the market to kind of grow a little faster than it has in the 8 years. But you know, at the end of the day, this is money. It's a new asset class. It's something we haven't seen before. You know, having digital assets backed by private keys, which at the end of the day are data. And you know, technology companies outside of crypto have shown they aren't necessarily very good at protecting data. So from a security point of view, there were hurdles to overcome. I think we got through most of those kind of in the 2013 to 2016 era. Then there became compliance and regulatory issues to answer. And you know, in the early days, none of the participants had much of a regulatory standing, but that started to sort out as well. And then of course we've needed just, you know, more growth and adoption and getting the knowledge out there. So regulators are getting educated, businesses are getting educated. Then lastly, of course, this last year has been a wonderful accelerant for the space. You know, it's somewhat ironically on the back of the the backdrop of coronavirus with, a global macro condition that we haven't really seen, but plays pretty well to some of the advantages, in particular for Bitcoin. So look, who's participating? In the early days, it was crypto companies. We had crypto exchanges, we had crypto custodians that were using BitGo in those early days. Then we started to see some fiduciaries come in, people that are running funds, right? Family offices, et cetera. But what's exciting about today is that we're seeing certainly those groups growing. We're also seeing corporate treasuries starting to come into the space, and recognizing that, hey, this might be a better way to store their value than the dollar. And then the one I'm most excited about that we've seen actually recently is some endowments starting to allocate Bitcoin into their portfolios. So, endowments, wealth preservation, typically going to be some of the more conservative managers out there. And yet they're viewing digital assets as something that actually should be part of their portfolio in order for them to accomplish their goals. So, all of this has been pretty good. BitGo's had a pretty strong growth in terms of assets under custody this year, growing up over 40 billion in assets at this point. But that's because of growth pretty much across all sectors.
That's fantastic. So happy to hear. Tom, I'd love to talk to you about how the market's evolving. You and I grew up in the traditional markets where futures and derivatives are orders of magnitude bigger than spot. How do you see the blockchain markets evolving? And as a regulated spot and futures exchange at ErisX, where do you see the next couple of years playing out?
With respect to your experience, my experience, traditionally, when you traded by talking to someone and waving your hands around, you would actually see the futures markets be substantially larger, and you only need to look at things like gold, for example. COMEX gold futures, gold ETF trades far more than the physical gold market, and there's other examples of that we could point to. So I think the expectation over time is that we'll see that same sort of characteristic play out in derivatives for crypto as well, where you'll see far greater turnover in crypto derivatives than you will in the underlying spot markets. I think today, thinking about the customers we speak to, again, we're US focused. The advantage of futures over spot that many potential participants see is there's far greater clarity on where their collateral goes, where it's held, how things settle, when they settle. There's far greater clarity about in the event that there's some sort of failure in the chain of where their money is and what their rights and title are to it under bankruptcy and other sorts of provisions. There's all sorts of characteristics away from the underlying asset's intrinsic value that institutional market participants, those who manage money on behalf of others, worry about, whether they're trading an equity, a future, or they're trading crypto. So we're seeing a lot of those types of questions come to us from institutions that aren't in the markets today that want to be, those that are interested in spot, but for a variety of reasons don't see themselves as being able to transact in spot, either because they won't be allowed to, because of the type of entity they are or who their customers are, or because of their investment mandates. So they look at futures and derivatives as being in the US very clear. The regulation is well known, it's public, it's well tested during times of stress and volatility. So we're seeing a growing interest in those sort of regulated and licensed futures markets here in the US, as opposed to the growth we've seen over the last 4 or 5 years in the non-US lightly or unregulated derivatives markets. As far as the types of products they want to see products that they're familiar with. So today in derivatives in the US, you have some cash settled products at CME. You have physically settled products here at ErisX. What we don't have at ErisX currently is a margin derivatives product that's coming, that's in our regulatory approval pipeline. That's what they want to see. They want to see the margined futures products, but they love the idea of having it on a platform like ours where the underlying spot trades, because ultimately there's going to be a basis trade that develops. And the inefficiency of trading spot through one clearing mechanism and futures through another is just not something that's going to be cost effective from a treasury perspective and risk perspective for most institutional participants. When they trade, rates today, they're trading that underlying bond and they're trading futures, and their prime broker makes that a very clean transaction for them from a financing and settlement perspective. That's really not an option for them in crypto derivatives in spot today. So what we're hearing a lot is, get us that margin future on your platform. You offer spot. We love the protections of futures. And for those of us that can trade the basis, we want the convenience of managing that all in one place. So that's primarily what we're hearing. Again, very traditional US style developed financial market customer that we're speaking to, maybe a little bit different than what we've seen over the last few years in the growth in non-US derivatives markets.
Great, thanks. Michael, I wanted to turn to the fascinating growth of Amber. Your whole team comes from very institutional backgrounds, Goldman Sachs, Morgan Stanley, Bloomberg, but some of your initial success has been on a kind of more digital asset retail orientation. What are you seeing it's working in Asia, and where do you think it's going over the next couple of years with institutions?
Thank you, Dan. Yeah, like you said, Asia crypto market historically has been dominated by the retails. Chinese participants, Korean participants, they're very active in terms of both as retail investors and I guess a bit more so as retail speculators. And now, over the past year or so, as we've seen the space, the whole asset class move to be more institutional. It was mostly led by, I think, U.S. institutions in the 2020, I guess we call it the institutional adoption era. Here in Asia, we started to see a little bit of that recently, with mostly, family offices, multi-family offices, or, companies that have more flexible mandates started to allocating to crypto, or some of them even started to try to offer crypto to their own customers. However, it is still early, I think, comparing to the U.S. counterparts, because mostly due to the different regulatory environments. I mean, Asia has a very a diverse range of regulatory environments when it comes to crypto. You have the more open, more advanced regulatory environments in markets like Korea and Japan, but you also have way more conservative when it comes to crypto regulatory environments in for example in China, and even more so in traditionally very open markets like Hong Kong. So how we deal with this in the Asia region is that at Amber Group, we're ready to service everyone. Our own background, like Dan mentioned, is more on the institutional side. We used to trade and trade with and trade for hedge funds, large family offices, etc. We are still servicing some of those types of clients even in this region. For example, recently there are some listed companies in Hong Kong called Meitu that try to actually start to allocate to the space. And in Korea, you have Naver, who's quite active in the crypto space. But it's still early, and even these companies we talk to, they're having have to regularly report and keep updating their crypto activities with their corresponding regulators. So I mean, I think it would take a bit of time right now, but given the size of the Asian markets and the investable assets from these players, right, the whole space is booming very fast. Along, this year on our side, the most significant customer influx or institutional adoption comes from these family offices. These are the family offices of these large tech giants in Asia, or their founders, their early executives, their own personal wealth start to move into crypto. And we start to see that more and more. And first they just started with simple things like allocating to Bitcoin. They will buy some Bitcoin on dips or use a TWAP with us or whatever. But after they get comfortable, they start to get a basket of tokens that they like, start to do structured products, they start to do options, and then we start to see these more and more interesting activities. And being more, I guess, more adventurous with derivatives, or being more sophisticated with being more financially educated with structured products. These Asian family offices are getting into the space very actively, very fast, and we see a huge opportunity with their increasing in participation.
Thanks, and I would say that we've been very grateful for Amber's help. Like all the 4 investments here on the panel, we started using the product first, and then we invested in the equity of the firm. Evgeny, I'd love to turn to you, and you bring such a deep background in building out large HFT firms. Are you basically just role in the movie because you've already seen how it works and applying the same things that worked in other markets, or is blockchain different? And how do you build out your product suite?
Yeah, I guess it's it's not that simple. Like I guess like just like anyone that comes to crypto for the first time, they do expect that we'll just copy paste what we were doing in traditional finance and it will work. But basically so many of the like financial primitives are missing in crypto that you are pretty much used to after whatever 10 years in traditional finance, like I don't know, clearing houses, prime brokers, free leverage, regulators for better or worse. All of it is missing, or it's still like at a relatively early stage. And it kind of presents a pretty big challenge for anyone from this traditional experience, but it also presents a pretty big opportunity as well, because you need to either recreate a lot of those primitives in this like new weird world, or you actually need to like learn to live with it, learn to alleviate any risks that come with it, and actually, once you do it, once you conquer all those like small and big challenges, you actually do find yourself with a pretty significant competitive advantage. And I think like if you look into DeFi in particular, that's even more interesting from that perspective, because you basically don't have any blueprints. Nothing really ever was created before to copy from even. So you actually need to think like, do the things that were built before in traditional finance, like are they even applicable to this, or is it actually better than traditional finance? Like things like T+2 settlement, which is which people are talking a lot about with the whole Robinhood saga. Like it's unheard of in crypto, right? It's so by building those new primitive, like those new primitives and those new building blocks in DeFi, you actually, we are looking to actually build something which will hopefully overtake the traditional financial system as well going forward. So we are quite excited about that.
Hey, a follow-up question on that, is that happening in years, decades, or centuries from now, that DeFi builds essentially a parallel financial system?
I would say yes, and I wouldn't be surprised if some of those primitives that we see like spawning like crazy on DeFi actually makes their way to traditional finance. Well, maybe not this year, but I can easily see it happening next year with certain derivatives, for instance, because some of those products are simply superior to what's happening in TradFi.
Thanks. Tom, I'd love to ask you that same question. How is the experience of providing institutional products the same as you've been doing your whole career, and what's different, and how are you getting institutions comfortable with the blockchain space?
And then I would say on the same front, the concerns are always the same. They tend to revolve around risks in this different flavor. Am I going to be able to get my trade completed? Is my trade going to settle? Do I have counterparty risk? These sorts of things are universal to any sort of trade that's taking place. So I think the types of questions may have different details in them because there's a new way of doing business in the digital asset space. But ultimately, the questions themselves are the same. They're no different. So I'm not surprised by the types of questions we're getting. There's probably just a bit more education required in responding to those questions because there's not always something that's analogous to what they know. With that stated, I would say that what we've tried to do at ErisX is to create things that are analogous to what people know today. They know what a derivatives exchange is. They know what a CFTC regulated clearinghouse is. So when we start to demonstrate to them that actually it works very similarly to what you see today on other regulated platforms in other clearinghouses, this is how it works, they tend to get a bit more comfortable. I think I'd also tell you that the deeper we get into some of these conversations with institutions, there's sort of a moment when I know they've got it. And it's when they chuckle. And they chuckle at the moment. And I think the Bloomberg columnist Matt Levine puts it very well that, in crypto, we're sort of rediscovering the lessons of finance all over again. There's a lot of things that are already known. And a lot of the folks get it. And I know they get it. when they say, wait a minute, this works just like, and they go through an equities example or they go through a futures example. And we'll say, effectively, yes, here's the particulars, but effectively, they're like, oh, okay, I thought it was more complicated than that. So, I think the story starts to change if you do get into things such as DeFi or what have you. I'm really speaking to trading spot and derivatives on familiar platforms under familiar regulatory regimes. So, I think there's a lot of growing up that'll continue to need to happen. And that growing up is not just about tech, it's also about education. But I think it's happening at a very rapid pace. And at least from the ErisX perspective, we're trying to bring the familiar to these marketplaces because it's what people want to hear. And it's not to placate them, it's because they already know how to deal with these sorts of structures. So why create a more arduous road for them to traverse if we can bring to them an accessible structure, regulatorily, technically, and otherwise, that they already know and understand, so they can actually get to the point of trading and interacting as opposed to risk assessing, which is really where that institutional mind share is right now. It's risk assessment, and it gets more complicated in bigger institutions because there's more people involved. It's almost like an enterprise software sale, right? There's 50 people in a room, only one of them can say yes, but every one of them could say no. And you have to go through checklists and discussions and diligence. So par for the course, if you dealt with institutions, make it sound familiar because it is familiar, and look for those moments where that aha bell rings and they get it because we've made it look and feel like something they already know.
Thanks. Michael, I want to turn back to DeFi that Evgeny brought up, that Bitcoin was sponsored after the financial crisis of 2008 as a solution to the centralized financial institutions that were imploding, and it was supposed to be decentralized. And for the first 12 years, everything's pretty centralized. What are your thoughts on DeFi, and how is Amber fitting in with the DeFi boom?
Thank you. I think that's a very interesting question. Like you said, the space started as a decentralized alternative to the traditional financial system. But most of the services in crypto over the past 12 years have been provided by centralized financial providers. Amber kind of was one of those for the first 2 or 3 years of our startup life. But this is how I look at it. I think DeFi clearly is booming, and we have been active participants in both using the DeFi infrastructure, participating in the protocols, as well as a service provider that delivers the end decentralized liquidity, and the decentralized yields, the decentralized offerings to our customers. And the way we do that is similar to how we aggregate and provide services from centralized venues to our customers. As an integrated crypto finance provider, we almost have to be both asset agnostic as well as venue agnostic, right? It's about what our customers want. If they want the best price, and the best price happen to be in centralized venues, now we have to deliver that from the centralized venue to them. On the other hand, if they want service from their self-custodied wallets, when we do that with our customers now, and we do that right now offline with our VIP desks, but we are integrating that into the Amber Pro platform in the second half. So if they want that service, as a wallet-to-wallet services, we will have to provide that as well. And to do so, basically, we will have to have the infrastructure. Similar to Wintermute, we had backgrounds in traditional high-frequency trading, in building high concurrency trading systems, and that was very useful when we deliver those liquidity, those services from these different venues. We basically have to aggregate, even back then, all the different exchanges across different regions, across different setups. And to do that, you have to build the backend system that's robust enough, that's fast enough, that's sophisticated enough to deliver that. Now adding the DeFi element into that is basically adding another layer of expertise into that. Basically, now you have to have on-chain aggregation. You have to understand which smart contracts are safe, and safe has a different definition in risk management, right? So this space evolves so fast, and to really deliver the best services as a one-stop crypto finance provider or platform, Amber Group has to keep updated with all kinds of developments, all kinds of new products, all kinds of new offerings, all kinds of new market infrastructures with the market. And DeFi is clearly a very significant part of it. In fact, not in order to build expertise, we have to participate not only as service providers, but also in this new young market where some of the infrastructure is yet to be built. We have to sometimes actively participate and build some of those infrastructures ourselves. One example is, we incubated the KeeperDAO project along with Talo, where its first on-chain liquidity backstopper mechanism in the whole space. So because it wasn't there, and we think it's needed to be part of the decentralized financial infrastructure. So we have to evolve along with us, with the space, along with the industry, along with everyone on this panel, on this call, and to build it together. Only this way, I think eventually our customers, whatever they want, if they can get it in the crypto finance space, eventually we believe then they will move all their assets, all their activities into crypto finance form. And I think, all of us are working towards that kind of future.
And Michael, you mentioned the speed of change. How quickly do you think DeFi will be important on, say, decentralized exchanges versus borrowing and lending and other use cases?
I think it's already important, but it's the volume on DEX, on Uniswap, Sushi, whatever, or on borrow lending protocol, Compound ETH is already very large. But the problem right now is it's large volume contributed by a very small number or very small group of users, right? I think there's only the wallets that are active in DeFi are still in the scale of millions, right? We need to get that to hundreds of millions at least, right? And to do that, I think I think one of the best analogy I give in what we try to do and how we can help in that front is, right now DeFi still feels like DOS, the DOS system in early days of computer. You need a Windows for everyone to use, right? So you need to have people who don't understand how to operate MetaMask, don't know how to use a Ledger co-wallet to access and benefit from DeFi, as long as other forms of crypto finance. So what we try to do here is we try to be the Windows above DOS, so that everyone can essentially benefit and use the DeFi services. And how long that will take? Hopefully within the next 2 to 5 years. And we're pretty optimistic on that, because now with the size of the market, with the institutional adoption, there's just another wave of talents, of capital, of resources flowing to the industry. And with great investors such as Pantera supporting everyone, right? I think a lot of talents will be there to build whatever is needed for the next wave of large adoption.
Thanks. Mike, I want to turn to the industry as a whole. You were obviously one of the earliest in the space. There's been some consolidation. There have been some acquisitions by legacy finance firms. If you look out 2 or 3 years from now, do you think it's the legacy firms building their own products, buying firms like yourselves out of the space? How do you see the consolidation happening?
Yeah, actually, we have been talking to a lot of the a lot of our ex-employers or other large traditional firms. They are very keen to participate in this space, but they have a lot of legacy hurdles, as you mentioned, right? Not only just on compliance regulation, but also on how it's operates, right? In traditional finance, I think a lot of us who had the previous careers in those, right? You will have basically analysts or associates looking at a new product, right? Probably write a research memo to their boss, and their boss reverts to the board. In crypto finance, by the time that is done, right? Maybe the protocol they look at is already evolved 3 times, or might even be replaced and become irrelevant, right? So the speed of innovation is very difficult for these traditional firms, traditional players to keep up. So I think the natural thing for them to do is, to integrate or acquire or M&A with new players that are more crypto native, that are born and are natural to the speed of innovation in this game. But the difficult thing is, the crypto native firms like ourselves, like Amber Group, is probably growing too fast that we are here to challenge them, right, rather to be acquired. So I think there are clearly still young companies out there that are the right size for them to integrate. And but even after integration, right, I think they will have to let them run in their own native way. Otherwise, they just become another desk sitting in one of the banks, one of the traditional asset management firms that that knows about the space but can't do as much. Yeah.
Mike Belshe, what do you think the response will be in the Western capital markets? Do you think the legacy finance firms are going to build their own blockchain applications, or do you think they're going to acquire firms?
Well, we're gonna see both, and I think we're gonna see kind of two different halves. Certainly, right now, every investment bank, every major financial institution is already looking heavily at how they're going to service their clients that are looking for digital assets, and the demand has gotten to a level where it can't really be ignored. And pretty much every day, you see a new report out from a firm that previously might have said no to Bitcoin that is now ready to participate. So those firms are looking to participate, but as they look for how to get in, they're first and foremost looking at Bitcoin. How do I service my existing clients doing the things that I've done today? And they're looking for how to do that. So some of them might acquire to do that. Others will use sub-custody, white label solutions. We hear from a lot of these firms because we have fully white labeled capabilities, as well as the regulatory compliant sub-custody type of elements that are available. But actually, as Michael just said, I think also this industry is changing, and I think the future is just going to be different than the existing banking system. They are going to come in and participate. It's a very important step because we want digital assets to be ubiquitous, available to everybody at the institutional level, at the individual level, et cetera. But the innovation that's happening is happening at a very, very rapid rate. DeFi, super exciting space, but one of the biggest challenges, particularly in the United States, is the compliance and regulatory elements around it. It's far behind Bitcoin in terms of figuring out how we could put it into kind of a regulated safe product. So because of that, there's going to be firms that are going to continue down, whether it's the DeFi path, whether it's other blockchains, whether it's payments or international remittances or whatever the use case may be, that are going to be moving much faster. And here I think that we're going to see a new type of bank emerge, and it's going to have a combination of new products and services. And I think if you look far enough down the road, 15 years down the road, you're going to just see new names up at the top of the list. Frankly, the existing Western banking infrastructure is not moving fast enough. The regulation is too heavy to move fast enough. And so instead, we're going to see new firms emerge.
Thanks. Evgeny, I'd love to talk about what's missing. We've had a lot of progress with institutions. Some are engaged, but obviously a huge fraction are not yet engaged in the blockchain asset class. Is there one or a couple of products that, if they were launched, more institutions would come in? Is there anything, one or two things that are actually just missing from the space?
I guess the key thing that's missing is, like for us specifically, it's probably is free leverage. Just what I was pretty much used to deal with in traditional markets, where you can pretty much do unlimited kind of trade, unlimited number of trades with really decent balance sheet like Optiverse. But like in crypto, it's pretty tough to achieve the same way as, well, the same level of freedom, and it's primarily because like basically those major components, like basically connecting multiple exchanges all together and basically reflecting your balance on all of them at the same time. That's like almost there. I think we will see like multiple competing products like finally going online this year. But on top of it, somebody needs to build like proper leverage mechanics so that market makers could actually execute much bigger trades on all the centralized exchanges. And the similar saying, like it's why again we are quite quite bullish about DeFi. Similar thing needs to happen on DeFi, and there are like multiple lending protocols like Compound and Aave building towards it and potentially enabling like this sort of thing, like this sort of innovation happening actually much faster on DeFi.
Yeah, and with the excessive leverage and counterparty risks we've seen in the old school markets, DeFi might actually have some advantages over the existing infrastructure. And Tom, I want to ask you that question as well. Like, is there one or two things that would flick the light switch and institutions go from, you know, not engaged to everyone engaged?
Yeah, I mean, I agree with Evgeny about what the target solution needs to be for allowing that multi-market access with appropriate leverage to be applied. I think some of the existing crypto participants are actually the barrier to that happening. They're not the enablers of it because they sit in a very interesting position today where they have enough balance sheet, they can take that risk and the ability to manage it, and they're in a very well optimized space right now to make a lot of money. If you broke those barriers down, some firms that are large in the space today probably would not be very happy because their advantage would fade away. But I would say that if there's something that could happen, you know, here in the U.S., you know, we definitely still have you know, a lot of regulatory ping pong take place. I think, you know, Mike alluded to it. The state of affairs is such that it's a brake on innovation, not an enabler of innovation. And you know, I know there's been a lot of hopes pinned on the change in administration here in the U.S. and certainly with the you know, new chair at the SEC that has some familiarity. There's, I think, a latent hope that we'll get clarity around digital securities, which we don't have today. I think where we sit in commodities, it's a bit more clear. But certainly, a lot of good work have been done over the last year. I just haven't seen it put into action, such as some of the guidance from the OCC, where that acting chair Brian Brooks had put out, were good moves towards giving a clear path to how firms could ramp up their business in the U.S. and offering crypto services in that regulated, controlled way that the institutions do desire. So I'd say at this point, you know, faster processing on the regulatory side, so that those of us that are trying to innovate in that framework can do so. And I'd say that, you know, I don't expect the existing institutions to be the ones to do it because they have a vested interest in the current status quo. A lot of them benefit from the lack of quick change. So I think that regulatory clarity continues to be required. It's just now we're a lot better off than we were 2-3 years ago, but it doesn't mean there isn't work to do. And I think it's around getting uniformity in the US about what custodial requirements are, about who can transact with certain types of assets. You know, it's not widely understood, but many of the broker dealers in the US today that want to offer crypto to their customers can't, and they can't because they're part of what's called the bank holding company. And under the Bank Holding Company Act, if you're a BHC, Bank Holding Company, or FHC, Financial Holding Company control group, you have to get permission from the Fed in order to offer crypto to your customers. And there isn't one Fed. Feds are regional and eventually all rolling up into the DC Fed. A lot of the broker dealers today, especially the well-known institutional names, fall under that BHC umbrella. And it's a real break on their ability to offer these products. It's why they like the idea of offering derivatives instead, because that's very clear cut. But that's one of several things I could point out that if only we get quick clarity on that, rather than sort of the Schrodinger's cat version of you have to ask and see if it's in the box. Can we just like be told the contents of the box and get on with it? So I think that's the big one. And, you know, that's a good example where in the US, at least, that, you know, we're making it very challenging to offer these products through known intermediaries that have customers and are good actors from a risk and you know, money laundering and all the other sorts of regulatory perspectives that they just can't get there because of these barriers. So we have a long way to go still, despite the progress that's been made on the regulatory front.
Great, thanks. Well, we're going to wrap it up. Evgeny, Mike, Tom, Michael, thank you so much for this panel. I was really excited to have this panel because I wanted to share with all the institutional investors out there how robust the infrastructure for blockchain already is. It's amazing how much things have changed in just the last 2 years. Very excited to see what's going to happen in the next couple of years. And with that, I'm going to hand it back to my partner, Paul.
Thank you very much, Dan, and the rest of the panelists. That is a lot of progress going on the institutional infrastructure side, both from custody to prime brokerage to derivatives. And, I think for Pantera, those are the types of companies that we can really help out the most.